In this video, we're going to review the preparation of the tax return for Comprehensive Problem 1-2B, which is number 60 in your See Now assignment in Chapter 1. If you're comfortable completing this tax return, then you're going to be able to easily complete the tax return exam for Chapter 1. It's really important to always review the tax return demonstration videos before starting your chapter exams, because they will really make sure that you can properly report the income, deductions, credits, and tax liability for each exam, and it will go over any tax forms that you're going to be required to complete. Here in Comprehensive 1-2B, we have taxpayer Abigail Gant. She is a single mother and was born in 1987. There's really no place on the tax return to enter the taxpayer's birth date. We're just given that information so that we can determine her age. We can calculate that she's under age 65, so we don't have to worry about any additional standard deductions for her. Abigail works as a civilian accountant for the U.S. Army. She has an 18-year-old daughter who is a dependent and lives with her. So that's going to be very important when we choose the best filing status for her and when determining her dependent credit. Since we haven't thoroughly covered tax credits yet, the problem gives us a little extra information about the credit that Abigail qualifies for. Susan, the daughter, does not qualify for the child tax credit because she isn't under age 17, but she does qualify for the dependent credit of $500. So we're going to make sure that we get that credit correctly entered on our tax return. Tax credits are a great benefit to taxpayers. They're like getting a credit for paying taxes that never really had to be paid in. Tax credits are different from deductions, which is just a reduction in taxable income. Credits are a dollar-for-dollar reduction in the taxpayer's tax liability. So that means they're going to owe less taxes and can potentially get a larger refund. We're told in the problem that Abigail received a W-2. On your exams, you'll be given a W-2 that you'll use to determine the taxpayer's income. You'll see on the W-2 that it shows taxable wages and tips and also any federal income tax withheld from the taxpayer during the period. We're told in this problem that she had interest from Sioux Falls Savings and Loan of $202. We're given the information here, but on your tax return, you'll be given a 1099 INT, which reports the taxable and non-taxable interest that was earned by the taxpayer. We're told here that she had tax-exempt interest of $240. We don't see tax-exempt interest real often, but we're going to learn how to report it on our 1040. It still has to be reported even though it's tax-exempt. We have some extra information at the bottom of the problem. It says that Abigail had health insurance for the full year and does not want to make a contribution to the presidential election campaign. It says to enter all amounts as positive numbers and round amounts to the nearest dollar, which is how the IRS prefers that taxpayers enter their figures. They don't want to see the cents on the ends. So make sure you round figures on the returns to the nearest whole number, or you'll receive a deduction on your exam. Now let's get started with the tax returns. I'm going to pull up the 1040, and I've already filled out Abigail's information. Notice at the top we have her first name and last name along with her social security number. This information is so important because if the name and the social security number have an error, then the tax return will not be accepted by the IRS. Next, we have the taxpayer's address and a new question to answer that was not there on previous returns. It says, check here if your main home and your spouse's, if filing joint return was in the U.S. for more than half of 2025. So we're going to click that box to indicate yes. The block below asks if the taxpayer wants to contribute to the presidential election campaign, and we're already told that she indicated no. So we're not going to click either box. If you do check the box, then it does not change your tax liability at all. This fund was set up to encourage candidates not to accept private contributions to run for office, but these days candidates get the majority of their campaign money from private contributions, so there's really no reason to check the box. The next section is the filing status section. We're told in the instructions that Abigail is single, but don't be too hasty to mark single as her filing status. If you have a single taxpayer, double check to see if the taxpayer has a dependent that's eligible. If there's an eligible dependent, then Abigail can file head of household. With head of household, she gets a larger standard deduction than if she files single, and she'll also be in a lower tax bracket. Since Abigail has Susan, who is under age 19, we're going to make sure that we click head of household for her filing status. The next section to complete is the digital assets section. They're just asking if any time did you receive or sell, exchange, or dispose of digital assets, which is referring to cryptocurrency and other digital financial interests and investments. So we're going to click no for Abigail. The next section is the dependent section. So the IRS wants some information about the dependent that you're claiming. We are going to enter Susan's name first and last, and we're going to enter her social security number. The IRS is going to check and make sure that no one else is claiming this person as a dependent, because a person can only be claimed as a dependent one time. The relationship is daughter, and then we're going to check that Susan lived with Abigail for more than half of 2025, because that is one of the requirements of a dependent, that they live in your household for more than half the year. The dependent also has to be under the age of 19 or under age 24 if they are a full-time student. So that's why they're asking here if the person is a full-time student. If Susan were under age 17, then she would be eligible for the higher child tax credit. But she's 18, so Abigail can only get the credit for other dependents for her, which will end up being $500. Underneath the dependents section, there is a box to check if your filing status is married filing separately or head of household, and you lived apart from your spouse for the last 6 months. So this would be checked if there was a married taxpayer who was separated from their spouse. So this does not apply to Susan. So let's move on to the income section. To do that, we're going to go to our W-2. Our W-2 shows that wages, tips, and other compensation in box 1 is $65,204.86. So we're going to round this number up when we report it. And to round, if the change, the cents, are 50 cents or more, we would round that up to the next dollar. So we're going to round this to 65,205. If the cents were below 50 cents, then we just leave it at 65,204. But we're going to round that up to 65,205. And we're going to come back to this figure in box 2. This is the federal income tax that was withheld. Now, we don't really have any use for the Social Security earnings and taxes and the Medicare earnings and taxes. We would only have use for those if those taxes were underpaid or overpaid. And for us, we will not be addressing the over or underpayment of Social Security or Medicare. So the only figure we're going to be concerned with are the figures in box 1 and 2. So let's go over to our 1040 now and enter the total amount from box 1. And I'll repeat, make sure you round your figures. And if you put change on your tax return, you're going to receive a deduction. Okay, so that's all the earned income for line 1. And we are going to just bring that figure down to 1Z. You'll see on lines 1B to 1I that there are some things that can add back to earned income, but those will not be affecting us in this class. So you'll enter your earned income on 1A and then bring the total down onto 1Z. Remember, the problem told us that she had some taxable interest and some tax-exempt interest. The taxable interest is 202 and the tax-exempt interest was 240. So all interest is reported on line 2A. The tax-exempt interest will enter here on 2A. Notice that it is not entered over here to the figures that are taxable. We're only going to enter the taxable interest over on 2B. So now it's time to calculate total income. So notice down on line 9 is where we're going to enter our total income. It says to add line 1Z, 2B, and anything on 3, 4, 5, 6, 7, or 8, which we don't have anything. So we're just going to add 1Z and 2B. And that's going to give us 65,407 as our total income. We do not have any adjustments to our income, so our adjusted gross income is 65,407. And that's a really important number, so make sure you always fill out your total lines, your total income, and especially the adjusted gross income. The lines in between don't necessarily need a zero, but if it has a total, like on 1Z and line 9 and line 11, you need to make sure you put those totals in. So we're going to bring down on page 2 the 65,407. Now it's time to start working on the taxpayer's standard deduction. On 12A, it asks if someone can claim you as a dependent or your spouse as a dependent. If someone else is claiming this taxpayer as a dependent, the taxpayer could not take their full standard deduction. In this case, there's no indication that Abigail is claimed by anyone else. So we'll talk about box 12B. We're going to check this box only if the spouse itemizes on a separate return. If Abigail were married and she and her spouse decided to file married filings separately, if one spouse itemized, then the other would also have to itemize. So Abigail is not married, so we're not going to click that box. She was not a dual status alien. And that brings us to the boxes on 12D. Were you born before January 2nd, 1961? I believe the problem told us that she was born in 1987. So she is not over age 65 and is not entitled to an additional standard deduction. She would also be entitled to an additional standard deduction if she were blind, and so that's not the case. So she is just going to be entitled to the standard deduction for filing head of household, and that is $23,625. Okay, this is going to reduce her income down to her taxable income. She doesn't have any qualified business income deduction, additional deductions, so we're just going to subtract the standard deduction from her adjusted gross income. And when we do that, we get $41,782 for her taxable income. Now we have arrived to the most important line on the tax return, is to calculate your tax liability. I have quite often seen students just skip this line. Well, this is the whole purpose of completing the tax return. So you must have a figure on line 16 for the tax. And to find that, we're just going to go over to the tax tables provided in See Now, and we're going to go down and find the taxable income, which was $41,782. So we'll scroll until we find that. Okay, so $41,782 falls between $41,750 and $41,800. Now, to find her tax liability, we need to make sure we're in the correct column. And at the top, you will see the filing statuses. Hers is here on the end, the head of household. So for her income level, her tax liability is $46.73. So we're going to come back over and enter $46.73 on the tax line. Okay, we haven't learned about Schedule 2, so there's nothing additional to add to her taxes. So we're going to bring that tax down to $46.73. Make sure you have a figure on both lines 16 and 18. And on line 19 is for the child tax credit or other dependents from Schedule 8812. We're not told to complete that schedule yet. We will be completing it later. But for now, we're going to enter that $500 dependent credit that she's getting. So there is no other credit from Schedule 3. So we're going to add lines 19 and 20 to get 500. Make sure you have a figure on both lines 19 and 21. And then 22 says to subtract 21 from 18. So 46.73 less 500 will give us a tax liability of 41.73. Notice how the credit reduced the tax liability dollar for dollar. There are no other taxes to report, so her total tax is $41.73. The next section is for payments and refundable credits. Now this is where we settle up with the IRS. We look at what we owe compared to what we've already paid in. Now remember, we talked about the form W-2, the box 2. So let's go back over and get to Abby's W-2. And she had withheld and paid in advance her federal tax of $51.13 rounded. So over on our tax return, we're going to enter $51.13. Sometimes taxpayers may have other taxes withheld, maybe on a 1099 or some other form, But in this case, we don't, so we're going to bring that 5113 to line 25D. Abigail didn't make any estimated tax payments, nor did she qualify for any other credits. So we are just going to bring her total payments figure down to line 33. Her tax liability was $41.73, and she paid in $51.13, which is more than what she owed. So she has an overpayment. So when we subtract, we get an overpayment of $940, and she wants all $940 refunded to her. Now, had she paid less than her tax liability, then we would enter the amount that she owed down here at the bottom. So now we have completed Abigail's tax return, so you should be ready to complete your Chapter 1 tax return exam.